Hi, Tuesday, August 9th, 2016. Monaco 64 here, home of alternative economics and contrarian views. I'm going to be talking about the fractional reserve banking system and the cashless society because I think they go hand in hand. Basically, fractional reserve means that when you put your money in the bank, you deposit, let's say, $1 in the bank actually lends out $10 with the backing of that $1 that you put in there, or the £1. So they create £9 or $9 out of thin air, and those are the commercial banks who also are now involved in investment banking. So that's how they create money. It's not, the central bank does not create all the money. Many people don't realize that the private banks are creating money. And that's a problem. Why is that a problem? Well, as you probably remember, most of you, and some of you might not because you might be a bit young, but about 8 years ago, in 2008, when there was a banking crisis, people were trying to get their money out of the bank and there wasn't enough physical cash. And that's the reason why, because a lot of this physical cash, or actually a lot of the money that you think you have in the bank is not there, because they lend it out, and they lend it out many times over. And if they can't get, and they lend it out through loans or through creating securities, which are mortgage-backed securities or whatever kind of other securities that are not that liquid and safe. So when there's a crisis and people want their cash back and they go to the bank, it's not there. And so I would venture to say that, for example, if there's £1 trillion, for example, in deposits in the bank, and people think, generally speaking, that there's £1 trillion pounds in the bank, there's probably only like 100 billion in physical cash. So you can see why that is a problem. And presently, there's no move to eliminate or, repeal or stop fractional reserve banking, mainly because the private banks, commercial banks, they benefit too much from it. Can you imagine if you could create money out of thin air and lend it out, and at the same time have the government guarantee your operations, which is basically what the UK government and the US government do? That's a good deal. So they've got a lot of lobbying power, and politicians they're not proposing any of this, to end fractional reserve banking. And you might think, oh, that's conspiratorial, and you don't know what you're talking about. But even Mervyn King, and I've shown this book a few times. It's called The End of Alchemy. It came out this year. Mervyn King is the former governor of the Bank of England from 2003 to 2013, and he was in charge during the crisis. And on page 261, and I'm going to read from his book, he says, "More radical reforms." So I'm reading it. I'm quoting from his book. "Frenetic activity among the official community cannot conceal the fact that, although much useful repair to the fabric of regulation has been made, nothing fundamental has changed. The alchemy of our banking system remains, since the bank bailouts in most advanced economies were huge. It is surprising that more has not been done since the crisis to address the fundamental problem. The scale of central bank lending to a relatively small number of financial institutions was so large that one could have paraphrased Winston Churchill by saying that never in the field of financial endeavor has so much been owned by so few to so many and with so little radical reform. So he's basically saying here, the taxpayers in the developed world bailed out these, couple of dozen banks, and nothing's happened to, try to stop this from happening. This is Mervyn King, who was not only governor of the Bank of England for 10 years, but he was the chief economist for 10 years. So, and he goes on to say, of course, governments, financial regulators, and central banks are well aware of the nature of the problem, but official efforts to tackle it are in stark contrast with more radical ideas proposed, albeit never implemented by earlier generations of economists. So, and he goes on, and I'm still quoting, even though the degree of alchemy of the banking system was much less 50 or more years ago than it is today, it is interesting that many of the most distinguished economists of the first half of the 20th century believed in forcing banks to hold sufficient liquid assets as reserve to back 100% of their deposits. They recommending ending the system of fractional reserve banking under which banks create deposits to finance risky lending and so have insufficient safe cash reserves to back their deposits. So, and he goes on to talk about this proposal, but I'm gonna, jump forward a little bit, and because some people might be asking, so how, if banks are only going to take deposits and not, lend, make risky lending, how is the economy going to be financed? So I jumped to the part where he kind of, gives the solution to that. So he goes on to say, so far so good, but who would perform the many functions that banks carry out today? Especially lending to businesses and households, so enabling them to build factories and purchase homes. In other words, who would finance the transfer of existing assets and bear the risk involved in financing new investment? That relates to the liabilities of banks under such radical reforms. If deposits must be backed with safe government securities, then it follows logically that all other assets, essentially risky loans to the private sector, must be financed by issuing equity or long-term debt, which would absorb any losses arising from risky assets. As a result, this approach would in effect separate safe and liquid narrow banks carrying out payment services from risky and illiquid wide banks performing all other activities. It would be illegal for wide banks, including the shadow banking sector, to issue demand or even short-term deposits. So he goes on to say in the book, the great advantage of such reforms, such as the Chicago Plan, that's what it was called back in the early first half of the 20th century, is that bank runs and the instability they create would disappear as a source of fragility. The Chicago Plan breaks the link between the creation of money and the creation of credit. So there's a difference between money and credit. Lending to the real economy would be made by wide banks and financed by equity or long-term debt, not through creation of money. Money would once again become a true public good with its supply determined by the government or central bank. I personally don't agree that it should be determined by government or the central bank, but at least it's a move in the right direction. I think it should be determined by the free market. So there you go, Mervyn King saying that if we really wanted to solve the problem of instability in the financial sector, we'd have to basically reform and ban fractional reserve banking. So that's from Mervyn King. So the reason I'm talking about Cashless Society is that there's an article today in the telegraph.co.uk, and it says competition watchdogs to enforce smartphone banking revolution. And the article says Britain's biggest banks will be forced to offer customers a revolution in mobile banking, or cell phones, mobile phones or cell phones, for Americans, and with the same services available on smartphones as can be found in high street branches, competition watchdogs will say today. So basically, the government is saying that by 2018, everyone that has a mobile phone and wants to should be able to do all their banking through a mobile phone or a cell phone. And they give the excuse that it's for, convenience. And it might be convenient, but at the same time, they say that it will, decrease the need for bank branches, so you won't be able to have to go to the branch anymore. But to me, it seems like a backdoor to a cashless society. I don't think it's going to happen completely by 2018 because there's still a lot of elderly people who don't like the smartphones. They like to go to their bank. They like to take their cash out. But in my opinion, that's the path, that the government seems to want to take us into here in the UK. Even though we could have the reforms that Mervyn King talks about. And I do admit that he comes out afterwards and says there are, points against those kind of reforms. But in my opinion, it makes a lot of sense to ban fractional reserve banking from commercial banking or where you put your money on deposit. That doesn't mean to say you can't take your money and, put it in riskier investments and have a return on it. But the money in the bank, it's always there. So that's why I thought it'd be interesting to mix together, the nature of fractional reserve banking, what it means, and the cashless society. Because when you got an unstable fractional reserve banking, the last thing that banks want is for their depositors to be taking cash out of the bank. So it all goes hand in hand. So if you read this, about the UK government and this competition watchdog, which is an oxymoron in my opinion. I think the free market is the best kind of competition watchdog. If you read this, it just goes to show that the UK government is not thinking about fractional reserve banking and reforming it. They're thinking of keeping your, cash in the bank through things like the smartphone banking revolution, which in my opinion is a backdoor to a cashless society. So if you enjoyed this video, please like, share, and subscribe. You can also donate to my channel. I accept Bitcoin. I've got my Bitcoin address below in the description, and I also take donations via Patreon. Take care. Bye.